There's only so much that I can teach you about market context in these settings. However, being live with me every day when I trade, that is one of those things that is going to be a big help. Hey, welcome back to the channel. It's Flex and Joe. We are going to work on some more back testing today for my strategy. I posted this video on my Instagram where I showed that in the same day the strategy went 5 for 5. So I've expanded my strategy from just looking at NASDAQ to looking at other futures instruments that are commonly traded. Gold, ES, RTY, the Russell, the Dow, YM. Then you also have NQ, NASDAQ. So that's 5. So in the same day, all 5 of those trades hit. They were beautiful setups. They all played out well. And I'm going to break those trades down for you in more depth than what I did in the reel, which will be posted in the description, right? So if you're not following me on Instagram, you definitely want to check that link out. Let's go ahead and jump into the charts. All right, we're going to start with MES. We're on Wednesday, July 8th. Before I get into the trade over here, let's just talk about one other thing that I take into account every day when I approach the market, and that is the overall market sentiment. There was news overnight. We had this massive leg down. Before that, we were trying to hold this area of support. You can see 1, 2, really 3, 4, 5, all these different interactions with this level of support here. When this level of support broke, made a large leg down. Then we came down here, we actually make a little like W pattern off the lows, higher low, push up, and then we get into here where we're consolidating right into the open. This was a tough spot to be in, and I think that going into the open, understanding that the context was we made this leg down, we pulled back about halfway. Most people are expecting it to do this and go right back down. Now let's get into the basic strategy. First thing you're going to do is if we go to the 30-minute chart, here is the first candle of the New York session, the first 30-minute candle. You mark out the high and you mark out the low of that first 30-minute candle. I have an indicator that plots these levels on my charts for me automatically. If you would like a copy of that indicator, it's called Vulcan Key Levels right here. There will be a link to it in the description box below. If you're wondering why it's called Vulcan Key Levels, it's not the Star Trek Vulcan. It's the theme behind the Discord. It's where we work on building trading habits and trading strategies with discipline, willpower, and precision. That's why it's called Vulcan. Let's get back to the charts. I'm going to leave these levels on because I think it's great that it provides other context within the market, understanding we're below previous day's low, previous day's close. We're obviously under the market high, etc. Now we have the first 30 minutes of the New York Open, the opening range high and the opening range low, the ORB 30 low. Those are plotted on the chart for us automatically. Let's drop down to the 10-minute time frame. Now all we're going to do is wait for a 10-minute candle to close outside of that range. Here we have a 10-minute candle has closed outside of that range. From there, we're going to put on the 20 EMA, drop down to the 2-minute time frame. This is the exact same stuff I cover in the reels. Now we're on the 2-minute chart, and all we are doing is waiting for price to come up and interact with that 2-minute 20. Hey, really quickly, if you are finding value in this video, make sure you are like and subscribed because I am going to continue to drop a lot more valuable trading content to help you on your journey to being a successful, self-sufficient trader. Really quick psychological tip. That sometimes the trade just won't play out. It won't come back. It won't touch that 20 EMA. You just won't have the setup, and that is okay. You need to be willing to let trade setups go and not experience all the FOMO in the world because the market is moving and you're not in there. In reality, when you trade the market, you're not trading to make pennies here. You're trading to make big money, all right? And professionals make big money. So act like a professional. I want to just talk about what happened right here. So in this instance, again, I'm looking at the overall market context. I understand what's going on in the broader market. We are under previous day low. The chart is very weak. You can see we repeatedly tried to move higher after making micro lower highs, lower high, lower high. What happened here is we had this big wick on like, I don't know, it was like some NVIDIA gonna sell some chips to China news. It's really irrelevant. The point is, wicks do the damage, bodies tell the story. One of my favorite trading quotes. Wicks do the damage. We pushed into this 2-minute 20 EMA. We come down, we close here. I have a good basis of risk. I have a good target. What I would do next is look to take entry on the open of the next candle. Let the candle close, then take your entry. Open the next candle is here. We want basically this. We want to target, we want to put a stop above the highs and we want to target that low. I understand what's about to happen and I know the question I'm going to get asked. So let's let this play out. You see it pushes up first. Oh man, I'm red on this trade. You have to accept the risk before you click the sell button or the buy button, right? In this instance though, we have a couple of things that actually help us, with understanding that risk and thinking that it is logical. You have that opening range low. They came down, they based under it, they pushed off of it. They retested it, but ultimately closed down here. So they're just retesting, and the sellers are just picking up orders here. The buyers are trimming positions if they're long off of that low, because this is a key resistance point. So if buyers are selling there and sellers are defending, what happens? Most logically, added selling pressure is going to push the market back down, and we are going to go out and break this low. That is the basis behind the thought process behind. I realize what that looked like. I'm gonna make sure I draw my arrows. Y'all could go back and rewind that part. Oh shoot, that just adds to the thought process, and that we're going to move downward, right? So we do move downward, and you see in just a few minutes our target is hit, right? Target's hit, we go through it. Okay, now this is a good trade. This is almost 3 to 1. See, this isn't advice for anybody. I mean, none of this advice is all educational purposes, as we're on replay here. The concept of having runner contracts and trying to let a trade really grow and stretch as far as it can is one of those things that often flubs traders up, because now they're really striving to catch like these big wins versus of having like a systematic process. If you focus on the systematic process, then the profits will come. It's always process before profits. If you're always worried about hitting the long ball, like in Little League, and you want to be Barry Bonds, like, dude, it ain't gonna happen. Maybe you'll get some lucky ones and you hit some runners, and it just like, whoa, we had a flash crash, Trump made a tweet, blah, 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 blah. That's not the repeatable, systematic process I try to teach, that I try to execute within my own trading. Enough of this one. Enough of MES. Let's go to, okay, we're going to run through this a little bit faster now. We're going to do the same thing. 30-minute chart. This is your first 30-minute candle. This would be where you mark the opening range high and the opening range low. When you drop down the 10-minute time frame, you're going to see this is now your 10 a.m. candle. The opening range is breaking to the downside. Same thing, we're under previous day low. We had a big market move down, yada, yada, yada. Pre-market low, potential target. So now we're waiting for a 10-minute candle to close outside the orb range, and it did. Since a 10-minute candle closed outside the orb range, I just leave the 20 EMA on all the time, by the way, guys. Like, easier than toggling on and off. We are outside of that opening range. We're on the 2-minute time frame. What are we looking for? A 2-minute 20 EMA interaction. Boom. There it is. So let's back up. Let's delete this one. Now I'm watching the candle close. Watching the candle close is one of those things that is like a weird to improve your trading, because if you start focusing on the candle closing and not all that noise while it's going like this on every single candle, it can give you a clearer perspective as to what's really going on. That noise is like a slot machine spinning, or that roulette wheels, wheels spinning, and you don't know what's really happening, what's going on, right? Where did the candle stop? So the candle stopped here. If I was to just saying, okay, like we stopped right on the 2-minute 20, I want to see what happens on the next candle. So now we've just made this like big doji candle. I've got two different attempts by the bulls to make a move higher into here, and they're failing to do so. If I didn't feel confident waiting on that first one, now I have a decision to make. Do I wait and potentially miss the trade setup to get a little bit more confirmation? Because, you know, technically speaking, it closed just a little bit above that 20 EMA. Let me see if they make a little bit more of a push into here and then come back down, which they do. The context is everything. Also consider that, like, obviously have signs of failed buyers in this range. Joe, how do you know they were failed buyers in this range? See this wick down right before the open here, right before 9:30? See that wick down? And then they pushed. And what happened? What did they do? They failed to break this pivot high. If these buyers failed to break this pivot high here, what do you think is going to happen? Lower high, lower low. Buyers want to stop out. Those buyers wanting to stop out are now added sellers. Concept. Let's say, all right, I'm going to enter in short here. Now, where do you want to enter in short, and where do you want to put your stop? What you could do, if you wanted to, you could put your stop above the 10-minute candle that broke that orb low. That's a wider stop. It reduces the risk reward. It can prevent some wickouts. It's your decision. You can move the stop down to like basically the orb, or you could just try to play it on like a relatively fixed RR. You know, you're saying I want to go at least 2.5 to 1. Okay, whatever. That's your decision where you put the stop. I can't tell you where to put the stop. I can't tell you where to, you know, put your entry, all that stuff. And you may not enter it perfect every time. You might say, oh shoot, I entered down here, and then the ratio changes. That's fine. That's the big part of teaching this, with entering where the candles close, and it's consistent. You can be like, I'm always doing this. I like the idea of the consistent target. I like the idea of a consistent stop. This is the first candle that closed under the orb low. Do that one where they've already wicked up into here and they've rejected, and you can see that. I would feel pretty confident about having my stop here, or even like a little bit above the orb high here, just to give us some breathing room. We're done. Fantastic trade setup. Let's move on to YM. So now on YM, I'm going to spare you all the setup here. We know 30-minute orb high is marked, 30-minute orb low. See, I had drawn these out originally for the reel, so we can delete those. You can see how the indicator plots it right here, right? I don't have to think. I don't have to plot a level. It's automatically there. It is automated. It's boom. Overall market context. What do we have even on the 2-minute chart? We can see the overall market context. Big move down. Retraces, right? Now we zoom in. After that retracement, what do we have? We had the market trying to make a big push higher here. That same area and failed to move higher. See that? Failed to move higher. If we fail to move higher, we are most likely going to go lower. Move higher, move lower, lower high, crack a lower low, boom, we pull back. Now, I got questions about this one, a lot about this one. But Joe, can you enter this? Should you enter this when it's within the range? Entering when you're within the range be acceptable on the trade, on the setup. The biggest thing though is the market context. Of this market, we already see we made a massive move down and we've been failing to put in a higher high over the pre-market high pivot, not the pre-market high, but a pre-market high pivot. And now we are moving lower. We've moved lower in a decisive way and then retraced back up. The overall market context shows me that it's likely that we are going to make the move down. If for you just didn't like how powerful this candle was and it does look strong, I understand that. And we're waiting. We get the 2-minute 20 EMA rejection candle. If you were to just enter on the open of the next candle, your entry is here, your stop goes above that, and your target is there. It's a risk reward ratio of 2. Done deal. Okay, we're on MNQ now. Here's the setup. Go to the 10-minute chart first. 10-minute chart shows you here was the candle breaking down and closing below the opening range low. Let's look at the overall market context. MNQ was a bit stronger. It retraced much further, but still did what? It still failed to break a higher high over a key resistance point, and it started to break down. When it broke down back outside of the range, it retraced, and then it starts to make a leg down, right? So it moved up, it closed outside. We have a 10-minute candle closes outside of the orb range, drop down to the 2-minute time frame. You're going to do what? You're going to wait for a 2-minute 20 EMA interaction. 2-minute 20 EMA interaction gives you, we close back below. On the close back below, if you wanted to, you can enter there. Your stop would go above the high. I realize that this is what's a wide stop. It is a 40+ point stop. But Joe, I can't do that. I can't risk plus 40 points or whatever. Okay, fine. So you wait, maybe the candle will make us move up and then you enter and then you only risk here or whatever, but you're risking a wick out on NQ and she is a volatile woman. She's rough. I'm not going to say anything more about that. I don't want to insult anybody who might be in a relationship with a volatile woman. But we know NQ is rough. Tighter stops will often lead on NQ to more paper cut, more wick outs, more frustration, more tilt. The decision is yours. If you say, well, Joe, I'm a new trader. I got a small 25K prop account. I don't want to risk more than $200 per trade. And you take 2 micros. You're risking $180 if you put the stop where you enter, slippage, commissions, or whatever. Okay, fine. But still, if you were risking $180, this is over 2 to 1. This is a fantastic winning trade here. Fantastic winning trade. A member of the community literally took this trade, called it out, literally was in here at like 50, 56, 58. Like that was her exact entry. It was beautiful. I mean, here we go. All right, last but not least, we're going to go over the Russell, right? RTY. There's your orb range. 10-minute candle closed outside of the orb range. We do what? We drop down to the 2-minute time frame. We look for what? A 2-minute 20 EMA interaction. EMA is interacted with and it is respected. We do a little bit of a little wick down. Okay, go to the next candle. Candle wicks higher. If you aggressively just slap the sell button on the open of the next candle and you put your stop tightly here, you are gonna end up with a wick out. But if we look at, giving you a little bit more room, right? Appropriately, it comes down to just giving yourself some room. How you manage that. If you always put your stop above the preceding candle, you're going to end up with some wick outs. It's just going to happen. It's going to happen on RTY. It's going to happen on MNQ. You give yourself some room on this trade. You can say, all right, well, I'm going to take this trade at a 3 to 1. I think we know how it's going to play out. So guys, just to recap here, what we have, right? Clean, easy, repeatable strategy. Does it hit on all 5 every day? No. Is it a 100% win rate? Also, no. Right? The win rate is also going to depend upon your stops, your entries, your targets, etc., etc. I've had fantastic success with this as I continue to backtest this and refine it. the win rate is in the 80s. That is going to change over time. If I tell you it's 80% right now, logically speaking, could it not be 83% in 6 months? Yes. Could it also be 70? Also, yes, right? Market conditions change. Every moment in the market is unique. And don't just think, well, 4 out of 5 times I should be winning, so blah, blah, blah. And Joe's like, guys, we're looking at in hindsight, and I'm explaining to you the top trading setup that I'm looking at and teaching. A big part of that is the market context. There's only so much that I can teach you about market context in these settings. However, being live with me every day when I trade, that is one of those things that is going to be a big help. Okay. So if you're interested, the orb playbook, which covers a few of these setups, as well as some contextual things, the indicator, and joining the Discord community, all of those will be in the description box down below. I appreciate you for watching as always, and make sure you are subscribed. And if you found value in this video, you should give me a like, and make sure you're subscribed so you don't miss any more valuable trading content in the future. I'll see you in the next one.